Several NYSE-listed banking giants leading the headlines this week with their results. For more on all things earnings is Christine Short, head of research at Wall Street Horizon. Christine, welcome. Happy New Year.
Happy New Year. Thanks for having me.
Great to see you as always.
Good to see you.
What are your takeaways so far from these big bank results?
You know, I wouldn't say they've hit a home run exactly, but areas that we thought were going to be tailwinds we've seen investment banking, especially this morning from Morgan Stanley and Goldman Sachs, came in very well, which we were expecting, and it kind of is confirming what we knew. The thaw in M&A and IPOs of 2025 kind of makes that official. Coming into 2026, we believe deal making will continue to be a bright spot. And then some of the headwinds like net interest income turned out not as badly as we were expecting from some of these banks. Actually, it was quite good from Citigroup, Bank of America. Only Wells Fargo, I think, reported on the lower end and guided a little bit lower than expected. So far, I'd say pretty good start. We're not going to knock some of those results, but in light of everything, I think we're off to a pretty good start for earnings season.
How does this set up the results that are yet to come?
Yeah, these are the bellwether names. We hear a lot about guidance of the economy from some of these banking execs. Jamie Dimon is a great one to listen to. He's quite conservative, though, so he's always got kind of a cautionary tale, which I think is fine. But you just have to, listen to him knowing that. But so far, the banking execs seem very bullish on this year. They're, again, nodding to some of the headwinds. Of course, the credit card fees was very widely spoken about, as you would expect it to be, as well as Fed independence was another, area of focus. All of the banking execs believing Fed independence is critical to U.S. capital markets. So they did touch on those themes, which would sort of be a negative for banks. But overall, I think the picture, we saw wealth management from Morgan Stanley and Goldman Sachs being a bright spot. We're seeing investment banking, of course, equities trading, also a bright spot. So it kind of lines us up for a positive tone for the rest of the season.
What is your outlook in terms of earnings growth that we could see this reporting season?
Yeah, so far the blended growth rate is looking for S&P 500 EPS growth of about 8.5%. So that would be the 10th consecutive quarter of growth. Yes, it's not double digits, but as you and I know, as the season goes on, companies tend to be already, we're not even 10% through results, and we've got about 85% of companies beating expectations. So that just continues to drive that number up. Typically, we start the season lower and we see it go up by about 3 percentage points. One interesting thing I will note about this season, and it happened last season as well, is that analysts actually ratcheted estimates up heading into the season, which is not typical. Usually they're very conservative heading into reports, but we actually saw a bump up of about 0.5%. So analysts actually believing that this is going to be a strong season, and you don't always see that. A lot of that was driven by an uptick in estimates for tech, as you talked about. AI trade is back today. We're looking for a broadening out of sectors. We've started to see that, but as far as the earnings season goes, expect tech to be at the helm. Our earnings growth expected of 25%, revenue growth of 18%. So again, kind of carrying the weight of the season.
Wow, that's impressive. So tech definitely in focus, and obviously the semiconductor space, I'm sure part of technology as well. Do we know how the semiconductors are expected to perform within tech overall?
Yeah, they're one of the leading subsectors, as well as the usual suspects. I think really the focus, and this started a little bit in Q3 earnings and will continue this season, are the cloud providers. We're kind of moved on from the AI trading, the investing aspect of it, and now investors want to see, are those investments paying off? We saw names like Meta get dinged last quarter when they reported higher expenses as an AI, but investors just weren't quite sure if the ROI was there yet. But the cloud providers have been showing that payoff. So I'll be looking at Microsoft, Google, and Amazon again to see if those investments are continuing to drive overall growth.
Are there buzzwords that you expect will be showing up on some of these earnings calls and or in the releases?
Yeah, look, tariffs will still be there, but we've learned to sort of take those with a grain of salt, but expect them to follow up with how they've been managing those. And as we've seen, they've done so very well. The companies were quite resilient. Consumers were quite resilient to tariffs last year. Companies did everything from move around supply chains or production centers, pass costs down to consumers. And so certainly still looking out for that. It's also a midterm election year, so we'll be looking for what expectations are around that. We know to expect the administration probably to I would say keep things calm, although it's been not a quiet start to the year. But typically you see both parties try to keep markets in the economy calmer because you don't want to, have some large shock or roil markets ahead of an election. So we'll be looking for aspects of that. And then AI as well, the Fed, what's going to happen in May when Jerome Powell gives up his seat. So what are expectations about the next Fed appointee? And what about rates? We're expecting about 3 rate cuts this year at the beginning of the year. That's moved down to about 2 rate cuts. I think Morgan Stanley today said they're expecting a June and a September. So after Powell relinquishes his seat, we're excited to see, what they expect there because jobs numbers weren't as bad this last reading, and so you kind of started to see the expectations for Fed rate cuts fall as a result.
Any imminent reports that you especially have your eye on?
Yeah, look, it's all about after you get through the banks, which we've heard from, we kind of move into the tech season. So again, those cloud providers, Meta, interested to see what Tesla comes out with because they've certainly been in the news. So it moves on. There's like segments, as you know, each sector has its day. And then once you get through a lot of energy companies, them being the laggard this season. So then we'll start to hear from energy. And then of course, we always end with the retail earnings parade.
All right, Christine Short, head of research at Wall Street Horizon, joining us in studio to kick off this earnings season. Christine, thank you as always.
Thank you for having me.
All right, everyone, still